The Infrastructure of the Future, Decoding Nebius Group, NBIS. If you are looking for a way to play the artificial intelligence boom, you have likely come across Nebius Group, ticker NBIS. In the high-stakes world of Silicon Valley and global data centers, Nebius is currently one of the most talked about under-the-radar stocks of 2026. But Nebius is not just another software company. It is an infrastructure giant with a complex history and a massive vision. Before you consider investing, you need to understand where this company came from, how it is powering the world's most famous AI models, and why it's being called a NVIDIA proxy for the European and US markets. 1. The backstory, a tech giant reborn. To understand Nebius, you first have to understand Yandex. For decades, Yandex was known as the Google of Russia. It was a massive search engine and tech conglomerate. However, after the geopolitical shifts and sanctions following the start of the Ukraine-Russia war, the company underwent a historic carve-out. The international businesses of Yandex were separated and rebranded as Nebius Group. Headquartered in Amsterdam, Nebius left its Russian roots behind to focus entirely on becoming a global leader in AI infrastructure. Essentially, they took the brightest engineering minds and the most advanced cloud technology from the old Yandex and built a new, Western-focused company. This wasn't just a name change, it was a total rebirth of a tech titan designed to compete directly with giants like Amazon Web Services, AWS, and Microsoft Azure. 2. The core business, AI-native cloud infrastructure. What does Nebius actually do? They are a vertically integrated cloud provider. Most cloud companies rent you space on a generic server. Nebius is different. They design and operate their own data centers and servers specifically optimized for high-performance computing, HPC, and artificial intelligence. Think of Nebius as the landlord for AI. When a company wants to train a massive large language model, like the tech behind GPT-4 or Meta's Llama, they need thousands of specialized chips working together in perfect harmony. Nebius provides the physical data centers, the proprietary cooling tech, and the software layer that makes these chips run at peak efficiency. 3. The Microsoft and Meta stamp of approval. The reason NBIS stock has been on a tear in late 2025 and early 2026 is because of their massive partnerships. In a world where there is a global shortage of AI computing power, the biggest tech companies are knocking on Nebius's door. Microsoft, in late 2025, Microsoft signed a multi-year deal with Nebius valued at up to $17 billion. Microsoft isn't just a client, they're using Nebius's capacity to help power their global AI ambitions. Meta Platforms, shortly after, Meta, formerly Facebook, announced a multi-billion-dollar agreement to use Nebius's data centers for their open-source AI models. These deals provide Nebius with a guaranteed revenue stream and act as a massive vote of confidence. When the world's largest tech companies trust you with their most important AI workloads, the rest of the market takes notice. 4. The growth engine, from megawatts to gigawatts. In the data center business, your success is measured in power capacity. Currently, Nebius is in a massive expansion phase. They're scaling from hundreds of megawatts of power to a target of 2.5 gigawatts by 2026. To put that in perspective, 1 gigawatt is enough to power roughly 750,000 homes. Management is targeting $7 to $9 billion in annual recurring revenue, ARR, by the end of 2026. Considering they were doing just a fraction of that a year ago, this is one of the most aggressive growth stories in the entire technology sector. 5. The leveraged way to play, NBIS ETFs. Because NBIS is such a high-momentum stock, several specialized ETFs have launched for investors who want to trade it with even more intensity. If you see tickers like NBIG, Leverage Shares 2x Long NBIS Daily ETF, or NBIL, Granite Shares 2x Long NBIS ETF, you are looking at leveraged ETFs. How they work. These funds aim to deliver double, 200%, the daily performance of NBIS. If NBIS goes up 2% in a day, these ETFs should go up 4%. The catch. Leverage works both ways. If NBIS drops 5% in a day, a leveraged ETF will drop 10%. These are not buy-and-hold investments for beginners. They're short-term trading tools designed for sophisticated investors who want to magnify their bets on the AI trend. 6. The bull case. Why invest in NBIS? Supply versus demand. The world is sold out of AI computing power. Nebius has the physical buildings and the power connections that everyone else is desperate for. Top-tier hardware. Nebius is one of the few providers already deploying NVIDIA's next-gen Rubin and Blackwell platforms. They stay at the cutting edge of hardware. Efficiency. Because they build their own servers and cooling systems, their profit margins have the potential to be much higher than competitors who buy off-the-shelf equipment. Optionality. Beyond data centers, Nebius has side bets in autonomous driving, AVRide, and AI data labeling, Toloka, which could become massive businesses in their own right.
7. The bear case. What are the risks? Valuation. By almost any traditional metric, NBIS is expensive. It trades at a high price-to-sales ratio, and it's currently unprofitable because it's spending billions of dollars on new data centers. Execution risk. Building 2.5 gigawatts of capacity is incredibly difficult. Any delays in construction or supply chain issues with NVIDIA chips could cause the stock to plummet. Geopolitical shadow. Although Nebius has completely separated from its Russian past, some institutional investors remain cautious about the historic links to Yandex. Competition. They are fighting against hyperscalers like Google and Amazon, as well as well-funded private competitors like CoreWeave. 8. The financial snapshot, 2026 outlook. As of early 2026, here's what the dashboard for Nebius looks like. Revenue growth, over 300% year over year. Capital expenditure, CapEx, billions of dollars being poured into global sites in Finland, France, Israel, and the USA. Profitability, not yet profitable on a net income basis as all cash is being reinvested into growth. Market cap, currently in the large cap category, reflecting the massive expectations priced in by the market. Conclusion, is Nebius right for you? Investing in Nebius is a bet on the physical reality of AI. It's easy to build a chatbot, but it's incredibly hard to build the brain that the chatbot runs on. Nebius is building those brains. If you believe that the AI revolution is just beginning and that the world will need exponentially more computing power every year, Nebius is a pure play on that trend. However, you must be prepared for extreme volatility. This is a stock that can move 10% in a single day based on a single news headline. As we discussed in our segment on Die with Zero, you shouldn't let the stress of a volatile stock ruin your quality of life. If you decide to invest in NBIS, treat it as a high-growth speculative portion of your portfolio, the engine that could drive massive returns, provided you have the stomach for the journey.